Good evening, traders and investors. Will back here with another one, coming to you with a Thursday market recap. Hopefully you guys had a very good day in the markets today. And in today's action, the S&P, the QQQs, and most of your major sectors actually ending the day in the red. Now today was a bit of a muted day. As you can see, we started off the morning very soft and a big decline, and thereafter the markets kind of did absolutely nothing, staying range bound on the SPY, staying range bound on the QQQs as well, and most of your major sectors never actually recovered. Matter of fact, we also had some pretty low volume today in relation to the last 2 days of trading, where we saw a lot of the big tech names and retail fan favorite names really fall off a cliff. Today was a bit more of a muted day, a bit more sideways action, but what we did not have today was the rotation from the bottom half of the market. You can see that not only big tech was down, but also the bottom half of the market wasn't really there to pick up any slack. Today, really sideways action with a bearish leaning bias. Now, the reason that the market was sideways today with a bit of low volume was, of course, because there's a lot of apprehension coming into tomorrow's meeting with Jerome Powell at the Jackson Hole Symposium, where he will be giving his comments about the direction of the economy, inflation, and especially the direction of interest rates. Why is this a concern? Well, prior, in my 10 to 12 years of trading, every single Jackson Hole meeting was a non-event, except for one key meeting all the way back here in 2022, when we take a stroll back in memory lane and we go back to the infamous period of time in the month of August, whereby we had a 3% drop. That's Jackson Hole 2022. The SPY was down a wide amount at that point in time, right? This one was down 4% on the QQQs, and on the SPY, if we take a trip back in that same memory lane, you'll see that this was the day of the infamous Jackson Hole back there. The SPY went down 3.4%. Why? Well, we'll tell you about that in today's video. So speaking about today's video, what we're going to do together. Number one, we will be taking a trip back in memory lane to explore Jackson Hole of 2022. What happened, why, and why there are some uncanny parallels between then and today as well. So we will set the expectations into tomorrow, because the markets tomorrow are expecting a big move from this meeting. As you can see, the expected move on the Qs here for tomorrow is 1% almost, and the expected move on the S&P 500 is close to that, all the way down here at about 0.76% for the one-day move. So there's a lot of apprehension into tomorrow. People are expecting a big move. We'll explain why. Thereafter, we will take a look at some earnings that I have prepared for you guys. 2 companies to be specific. We will take a look at Walmart and Intuit earnings as well, which had their earnings after the bell. Those should be quite interesting. After we're done with our earnings presentations, we will take a look at our normal technical analysis rundown of all our major market indexes, see how we are lined up into tomorrow's volatility event, take a look at the rotation or lack thereof, and do some just brief TA on all this segment right here. Thereafter, we will do the same thing across our big tech names, because we know big tech has not had a very easy week. So I'll give you guys some levels to pay close attention to, especially into tomorrow's action across the entire big tech list. And that'll be pretty much it for today. Sadly, today, since we're doing earnings and a bit of introduction, Jackson Hole, I won't have time to do the biggest gainers and losers of the day. There weren't that many, guys. Let's be honest. The moves weren't so crazy today. So what I'll do is we'll do them tomorrow. Since tomorrow we're probably going to have a lot more volatility. Sure, there were some nice names on the upside today, some nice names on the downside, but no real 4, 5, 6, 7% moves. So we've been doing these every single day of the week. You guys probably have a good impression of which ones I'm looking at, the levels that I was looking at as well. So we will save that section for tomorrow, and tomorrow as well, we will do a full portfolio recap of the week. And that's going to be it for today's video. So let's jump right into the action, shall we? In terms of the SPY and QQQ, as I said, very muted and downside bias today. The SPY down 0.4, the QQQ is down 0.46. And I will just reiterate that the heat map was not all the best today. Walmart coming down 4.5% after their earnings. In a few minutes, I will explain why, of course. Big tech, not a very good day. Financials, not a very good day. Healthcare, trying its best, but still not the best for them. And the bottom half of the market, again, not responding too well in terms of today's price action. In terms of the one-day relative performance, you can see that even better, to where we only had a couple winners and some sectors that nobody really cares about. Energy and basic materials, everything else to the downside. And for the 1 week relative, well, the damage has already been done. We will see if tomorrow causes even more damage across the markets. But the only ones that are positive today were the ones that got some good rotation earlier on in the week. Still healthcare, still real estate, still consumer defensives, and still energy. Everything tech related is still down on a weekly basis. So that being said, that's it for your early presentation and early rotation recap. let us take a stroll now back in memory lane and derive why were the markets down so much in 2022. Well, 2022 was a very funny time. We had skyrocketing inflation, and this is when the Fed was starting to really accelerate the path of rate hikes. Coming into Jackson Hole of 2022, the rates were already about 3.5% to 4%. And at that point, inflation had already hit its peak and was starting to downtrend. The peak was like 9%, and we were somewhere in this location right there. Inflation was seemingly coming under control from its peak, and the focus was on Jerome Powell to understand how high was the Fed actually going to push interest rates? Was Jerome Powell going to pause the pace of the increases? And what was his stance on the economy? And essentially what happened, guys, is that he really blew everybody's expectations out of the water, but to the downside. When he was asked these questions, or even in his prepared remarks, he basically said, no, the Fed is not even close to done cutting, or rather raising interest rates. We still have a long way to go. He was very, very hawkish. Probably one of the last times that I heard Jerome Powell being so hawkish. If you guys have been in the markets for the past 2 years and you think you've heard some hawkish speeches, just go listen back to the Jackson Hole 2022 meeting. It was not pretty at all. He basically threw cold water on anybody's expectations that interest rates were anywhere close to the ceiling. As a matter of fact, thereafter, he rose them 1% more. And he also, in that meeting, said that this was going to lead to economic pain. But in other words, he did not care that the Federal Reserve was going to do everything in their power to contain inflation. It was going to cause pain for households. It was going to cause pain for businesses as well. And as a result, he reversed any kind of market optimism that you were finding here, because we had a very nice rally off of the bottom as economic data was getting a bit better. And when he did that, the markets then went into the last leg of selling towards the bottom of 2022. Why is this relevant? Well, because today, although we're not facing the same type of inflation crisis, there are concerns about inflation. Here's what the market has to say about the Jackson Hole meeting tomorrow, and you will find some parallels between tomorrow's importance and 2022. So here we go. Investors see risks for market as Powell walks a tightrope at Jackson Hole. Now, investors are bracing for volatility as Jerome Powell walks a fine line between curbing inflation and supporting the labor market, with thin August trading poised to magnify any market moves from his Jackson Hole speech on Friday. Expecting volatility, investors see any pushback from Powell against an imminent shift to monetary policy easing as the biggest risk heading into the Jackson Hole event, meaning the whole market wants Jerome to cut rates right now. The analysts want Jerome Powell to cut rates. Wall Street wants Jerome Powell to cut rates. The Trump administration obviously wants Jerome Powell to cut rates. However, we'll see what happens, with poor liquidity in the summer trading expected to exacerbate the market reaction. Here's what one analyst had to say. It's next to the last week of August. It's Friday. Markets might be a little bit more susceptible to some volatility as a result of a little bit less liquidity, and this might lead to something of an unexpected move. Powell's speech comes amid market concerns about stagflation, a dreaded mix of sluggish growth and sticky inflation that could limit the Fed's ability to ride to Wall Street's rescue, just as a tech stock sell-off this week highlighted long-standing worries over steep market valuations. So there you have it, guys. The table is set. We are not dealing with the exact same things, but you can derive some parallels here. It is once again the question about the economy versus inflation. Is the Fed going to cut rates in September, which is the expected move at this current stage? You can take a look here at the probabilities. They are currently 73.5%. However, that is a decline from just 1 day ago at 82.4% and 1 week ago where we stood very close to 92%, right? So the expectations for a rate cut are kind of all over the place. They've been oscillating wildly over the past 2 weeks, since we've gotten the non-farm payrolls data, the CPI data, the PPI data, and several other smaller reports in between. It's a push and pull story. So once again, is the Fed going to cut interest rates in the month of September and try and alleviate some of the pressures on the labor market right now? Or are they just going to keep rates higher for longer and once again try to push back against the tariff inflation that must be coming, right? At this point in time, guys, Jerome Powell has went on record about a month ago and said, listen, if it weren't for the whole tariff situation, we would have already have cut rates And keeping in mind that the economy is still strong, we don't necessarily feel any pressure to cut interest rates. It stands to argue if the economy is doing relatively well, even though rates are currently still at about 4.5%, well then is there really a need to cut interest rates in the first place, or can they wait a little bit longer to kind of stem any damage that would be felt from the impact of tariffs on inflation on a temporary basis? He also acknowledges that this inflation from tariffs is temporary in nature. So once again, they are going to have to thread the needle. If they wait for interest rates, if they wait to cut interest rates for too long, will you risk damaging the economy? Do they care? That is the big question. In 2022, they didn't care. Do they care this time? As a result, where does the weight shift in terms of the balance of risks? Is there are there more risks right now to the inflation narrative running out of control? Or are there more risks right now to the labor market? Obviously, everybody has their own opinion on it. If you want mine, I personally believe that there's more risk to the labor market because inflation as a result of tariffs is not structural inflation, guys. It is temporary inflation. Why? Because consumers have a choice, right? You also have a choice. When certain products are more expensive as a result of tariffs, they have a choice to pivot the product from one product to another product that hasn't risen in price, or they have a choice to pivot an entire category type of thing, right? So that is why this type of inflation is somewhat temporary in nature. We're not just saying we snap our fingers and goes away. No. But what we're also saying is that it probably won't last for the next 3, 4, 5 years, whereby inflation just slowly upticks all the way to the moon like it did in 2022. So the table is set for tomorrow. Should be a very fun speech from Jerome Powell. And considering the fact that, as the article said, we are currently still a little bit weak and a little bit soft in price action, the door is open right now for the bears to really capitalize on this one. We know that the markets have been notoriously weak all of, Monday, Tuesday, Wednesday, essentially, especially some of the tech names, especially ones at higher valuations. So the door is open in the event that it's not a speech, or it's a speech that's not well received by the market. You guys know the drill. We are coming down, and we're probably coming down fast and hard. True to the seasonality, right? August and September are known to be very bumpy months, known to have a bearish leaning bias. So as a result, if this news release is not accepted well by the markets, you will expect further consolidation on the daily and weekly, and we will take a look at some levels that we should be looking at a little bit later in the video. For now, though, what we have to do is take a look at two company earnings, and we're going to start it off with arguably the biggest one of the two, which is Walmart. So Walmart was also going to come under the gun, under some scrutiny today to derive, well, how are they faring in terms of consumers, right? How are their consumers doing? Are the impacts of tariffs there? Are Walmart absorbing the tariffs or not? You might remember back in February, this is when Walmart crashed the market all on its own when it said, yeah, be careful, tariffs are coming and we're not too sure what's going to happen in terms of price impacts, but prices probably will go up. And after that, Walmart dropped about 10% from the highs. Today, we were seeking to understand, well, now that we have the full rates of effective tariffs across the rest of the world, how are you guys doing? Well, take a look right here. As a matter of fact, they missed on EPS by 7%, but not because their profits got crushed by tariffs. No, it was because of some other one-time events and some litigation costs. Matter of fact, the profits for their actual business, the e-commerce business and the regular commerce business, those profits were fairly good. So this miss on EPS might be a bit misleading. Moving on to revenue, they were up 0.83%. Let's take a look at what Walmart had to say, and we're going to do a lot of reading because this article does a good job of putting together everything that we want to look for when we look at these Walmart earnings in terms of the health of the consumer and the impact of the tariffs. So here it is. Walmart hikes sales and earnings outlook even as it says the tariff costs are rising. As I said, guys, it didn't really impact their profits and they hiked guidance. Still, stock was down 4.5% today. This is the first time it missed on quarterly earnings, talking about EPS, since May of 2022. The company said it felt pressure on profits for the period, including some one-time expenses, such as restructuring costs, pricier insurance claims, and litigation settlements. So nothing having to do with tariffs specifically for the miss on EPS. Walmart said it now expects net sales to grow between 3.75 and 4.75% for the fiscal year, up from its previous expectations for 3 to 4%. So a very nice increase in guidance on the top line revenue here, and also a raise in guidance for EPS. Adjusted EPS should be between 2.52 to 2.62, which is marginally higher than prior expectation, which was 250 to 260. So bumping it up by about 2 pennies. Still a guidance raise. The company is working hard to keep prices low, including speeding up imports from overseas and stepping up the number of rollbacks or limited time discounts discounts in its stores. Here's what the CFO had to say. This is managed on an item-by-item and category-by-category basis, talking about tariffs and the cost to the company, right? There are certainly areas where we have fully absorbed the impact of higher tariff costs, and there are other areas where we've had to pass some of those costs along. But he added, tariff-impacted costs are continuing to drift upwards. Even so, the CFO said, Walmart hasn't seen a change in consumer spending. By the way, they said the exact same thing last quarter. Everyone is looking to see if there are any creaks in the armor or anything that's happening with the consumer, but it's been very consistent, he said. They continue to be very resilient. The CEO on the earnings call had to say that middle and lower income households have been more sensitive to tariff-related price increases, particularly in discretionary categories. This has been the same thing, guys, for literally the past 2 years at this point, right? But is it getting worse? The answer is no. We're seeing a corresponding moderation in units at the item level as customers switch to other items, or in some cases, categories. So Walmart basically saying exactly what I told you guys about 3-4 minutes ago in terms of inflation, right, from the tariffs. Not all products have a price increase as a result of tariffs. Consumers have a choice. You can choose to buy the item that has moved higher in price because of tariffs, or you can choose to switch to other items or entirely different categories overall. Moving on further, Walmart's net income jumped to $7.03 billion. That was actually a really good print for Walmart in terms of bottom line net profits, 3.96% net margins. Q1, by the way, was 2.7. This was actually Walmart's best quarter of net profit margins in the last 4 quarters, so definitely something notable to me. Moving on further, comparable sales for Walmart for US climbed 4.6%, and that was higher than the 4% that analysts had estimated. Very nice pop here on same-store sales growth. At Sam's Club, comparable sales jumped 5.9%, higher than the 5.2% that analysts had estimated as well. Here are US same-store sales overall in a nutshell. Moving on to e-commerce, e-commerce sales jumped 25% globally and 26% in the US, as both online purchases and advertising grew. Walmart has been making an incredibly big push, guys, over the past year and a half into e-commerce, and it is bearing fruit right now. It is paying the juicy dividends. They have decent margins on that category, and revenue is really exploding. Moving on further, its global advertising business grew 46% year over year. Its US advertising business, Walmart Connect, grew by 31%. Those are fantastic numbers. As Walmart's online business drums up more revenue from home deliveries, advertising, and commissions from sellers on its third-party marketplace, e-commerce has become a profitable business. The company marked a milestone in May, posting its first profitable quarter for its e-commerce business in the US and globally. So if you guys didn't know, maybe none of you know, well, not none of you, but maybe some of you don't know, but it's a push on Walmart's third-party marketplace. This is exactly like Amazon, right? A lot of the products that Amazon has on its website are not products made or sold by Amazon specifically. It's from third parties. Walmart over the past 2-3 years has been doing a really good job of implementing the same business model. So if you want something that Walmart doesn't carry in its stores, you might be able to find it on its online marketplace, but that item will not be sold specifically by Walmart, the corporation itself. It'll be a third party that's selling it, and Walmart collects a little bit of a fee, kind of like Amazon, right? Here's your US e-commerce sales. Fantastic growth explosion here in 2020, this quarter right here. 26% overall. In the US, shoppers both visited Walmart more and spent more on those trips during the quarter. Customer transactions rose 1.5% year over year, and the average ticket increased 3.1%. So more transactions and a higher ticket price. Both good things for Walmart. So the business is definitely not struggling at all. Here's what the CFO had to say further. He declined to specify items or categories where Walmart had increased prices because of tariffs, saying the company is trying to keep prices as low as we can. But I did a little bit of digging overall here, guys, and there are some categories on Walmart that did uptick slightly. So about a month ago, CNBC did some digging here into 50 different items from Walmart, most of which didn't have any price increases whatsoever. But there are some that had some pretty notable ones. 12 pieces of pots and pans, up to $149 from $99, 51% price increase. This one, the Graco Modes Trio 3-in-1 travel system. This is basically a baby carrier type of thing. 50% increase. Why? Well, because most of the baby products come from China right now. White ceramic 12-inch frying pan. That was up 28%. but maybe you don't need to buy this one. There are other choices. So it all comes down to consumer choice, right? Some coffee was up 17% as well, whether you look at the Great Value brand or the Dunkin' Donuts brand, and other items such as milk, even 1% or 2% milk, that was up 6% overall. Special shout out to men's jeans, which are up a whole dollar. So that's probably not going to break the bank, but that was still up 4%. Eggs were down 22%, and the Mattel Swim Barbie, for all of you that were wanting to buy that, is down 25%. So as you can see, the categories are quite mixed, but those are only a few items. CNBC did an investigation of over 50 items, and those are the only ones that really had big price swings up or down. For the most part, everything else kind of stayed the same. So although the CFO doesn't want to comment on which items were tariffed higher, well, you can get a little bit of an impression from that page right there. But as you can see, guys, a lot of consumer discretionary stuff, right, that you can replace with other things or just from other brands. On the company's earnings call, the CEO said that the impact of tariffs has been gradual enough that any behavioral adjustments by the customer have been somewhat muted. But as we replenish inventory at post-tariff price levels, we've continued to see our costs increase each week, which we expect will continue into the third and fourth quarters. Yet even with higher costs from tariffs, Walmart has fared better than its retail competitors as it has leaned into its reputation for value, competed on faster deliveries to customers' homes, and attracted more business from higher income households. Sales of general merchandise, items outside the grocery department, were a bright spot for Walmart in the fiscal second quarter. That category struggled during peak inflation in recent years as consumers spent less on discretionary items because of rising grocery bills. But now, general merchandise is coming back. Comparable sales for general merchandise rose by a low single-digit percentage and accelerated throughout the quarter. He added that clothing and fashion sales really shine for us, meaning that consumer discretionary spending, guys, in terms of on stuff that people don't really need, right? 2020 and 2021 was like this. Everybody was out there, 0% interest rates, stimulus checks. Everybody bought a lot of things that arguably they either needed or didn't need. And then into rising inflation in 2022, right? 2022, and into the hikes of interest rates, people stopped spending. They bought all the cars, they bought all the electronics, they bought most of the clothes that they wanted, most of the furniture. And since then, consumer discretionary spending has done this. For the past 3 years, last year, it started flattening out. But still, people weren't rushing back to splurge on any items other than travel. Now, what we're currently seeing from Walmart and other people such as Amazon, a slow road to recovery in consumer discretionary spending. Very slow, but still a little bit of recovery. And we've heard that from the credit card companies. We heard that from the banks as well. So those are the earnings from Walmart. Hopefully you enjoyed that. In terms of, is Walmart stock a buy? Because I'm pretty sure that's what all of you guys want to know. Is this stock currently a buy at around $97, $98 right now? Well, let's take a look here at some of the financial highlights. Forward price earnings at $95 is about a 36.5. In terms of historical standards, guys, sadly, that is still very high for the company. Take a look at the historical price to earnings. You can see that prior, it used to oscillate between 18 to high 20s, right? But anytime you see it mid 30s all the way up to 40s, this is trailing price to earnings, by the way. I gave you guys the forward price to earnings. But still, as you can see, whether it's trailing or forward, higher than 35 or at 35 is at the higher end of historical standards. Why has Wall Street given them this nice boost? And why did Walmart have this massive rally right here? Well, it's because of the growth of their e-commerce business and advertising. Supposedly, it's going to help them improve margins over time. As a result, they're getting a bump in terms of valuation. But Walmart right now is not a cheap company. The PEG ratio is 3.32, but that might not be the best metric by which to value Walmart because the EPS growth rate is so low. Forward price to sales at 1.1. That is roughly standard with the company's historical average. They trade around a 1 sometimes or under 1, but you cannot say that it's great value. And a free cash flow yield of only 1.6% is also a bit low. Where would you actually find great value? No pun intended, because that's Walmart's slogan. Anyways, sorry about that, guys. I'll try to not make any more jokes, right? So where could you find possibly some good value on Walmart? Well, as I've been saying many times when I cover this stock on the channel, if I could find Walmart back down here into the mid 80s, right? Maybe about 10, 15% lower type of thing. I'm not saying it's going to happen overnight, but in the event that I look at this chart every single week, and in the event I can find it back down there around the 80s, I would not mind maybe buying some shares or something like that. But if I'm looking to trade it, well, a pushback down into here, the support currently standing at about 94 to 90 bucks, a nice quick snap back into the support range could provide a nice entry opportunity for some short puts under the market before the bulls maybe benefit from a bounce, and thereafter we can possibly get a rollover. But a first touch of a support zone, I would be a fan of playing some possible short puts under the market right there. But in terms of adding this one to a long-term portfolio, I mean, it's really up to you. Walmart's a fantastic company. It's not going anywhere. Usually they're a bellwether for the economy, right? They don't really go down in terms of a recession. If anything, people shop there more. EPS is very consistent. Revenue growth is very consistent as well. But the overall growth of the business, right, the revenue growth is just not fast enough for me. If I had to take a choice between this company or Amazon, I'd probably just buy Amazon because it's a much wider business, right? Not only do they have e-commerce and they're getting into the grocery business as well, but they have a whole other suite of items that Walmart doesn't have. Amazon has AWS. It has a much bigger advertising business as well. It has Amazon Prime Video. It has so many other different lines of business, guys, which makes it a more well-rounded business. So if I had to choose between Walmart and Amazon, I'd probably choose Amazon. And if I had to choose between Walmart and Costco, I would probably choose Costco, guys, for the simple reason that Costco has somewhat of a recurring business model as well because of the subscriptions and the very high customer retention rates as well. So Costco, also trades at a very rich valuation. I'm a bigger fan of Costco. Matter of fact, the only big box retailer that I have in my long-term portfolio is Costco. And then I also have Amazon as well. So Walmart, fantastic company. Can't blame anybody for having this in their long term. Really strong company, probably not going anywhere, but it's just the growth rates, right? You're not going to be expecting, 20% year over year performance on this stock, as you might expect from something like a Costco on average, and as you might expect from an Amazon on average as well. In my opinion, Walmart's going to do well, but it might just perform now that they've kind of priced in all the growth from e-commerce. Walmart might now start performing more in line with the S&P. As you can see right here, the purple line. Sorry, I have to do that because if not, it gets skewed because of the big e-commerce ramp right here. Walmart might just perform in line with the SPY, and I need something with a bit more growth. But Walmart, tremendous defensive company, all things considered. Moving on to company number 2, we're going to be talking about Intuit. Intuit, bit of a change of pace right here. Fantastic tech company that has many products that you guys might know already. In terms of how their earnings did, well, sadly, the company was down in the after hours about 5%. Take a look at this earnings slide right here. Oh, it would help if I would actually show it on the chart. There you go. Big drawdown on Intuit by about 6% because they missed on one key component of their business. Let's move into some of the earnings numbers here. 3.35% beat on EPS and a 2.34% beat on revenue. So they double beat. Why are they down though? Well, I'll show you guys. So let's take a look at some of the easy numbers right here. Some of the easy numbers, total revenue was up 20% year over year. Fantastic quarter for Intuit. Business solutions revenue was up 18%. Credit Karma revenue, which you guys probably know. Intuit's a company, they have Credit Karma, they have TurboTax. You guys have probably used a lot of those products before. Credit Karma was up 34% year over year. Operating income was up 39% year over year. And operating margin took a little bit of a dive right there, but overall Intuit does usually have consistent margins. It's just that depending on the way that they report, like you can see these revenue numbers. So a lot of the time they pull forward a lot of revenue in Q3. The company's always done that. They run somewhat of a hybrid model between one-time price inputs, right? Meaning that they sell services for a fixed price, but then they also run a subscription model. They're trying to pivot away from the one-time purchase model to a more subscription model, which is why sometimes their operating margins and sometimes their recognition of revenue streams, they're a little bit off, which is why you see sometimes some very large skews on these numbers. So let's move into the article and I'll describe to you a bit better what Intuit's business does and the various lines of business that they have. So moving into it, no pun intended. Sorry, I got to stop doing that, man. Intuit forecasts quarterly revenue growth below estimates as MailChimp lags. This is their marketing division for their enterprise business solutions. So Intuit has several different lines of business, but they're broken into two main categories. Number one is consumer revenue. Consumer revenue is the products that you guys know very well. Credit Karma, TurboTax. TurboTax is what allows you to file your taxes electronically. It's a very nice piece of software right there. And they also have a software they call ProTax for professionals, right? Or for businesses and stuff like that. But Credit Karma and TurboTax are probably the two biggest revenue streams of the consumer segment. Then they have what you call a global business solutions segment, which is the bulk of the revenue. What is that, you might ask? Well, I'm glad you asked. Intuit Enterprise Suite is the combination of QuickBooks, which is accounting software for businesses, making it easier to kind of keep a track of your revenues, your expenses, your various costs in the business, right? Whether those are employee costs, product costs, etc. So QuickBooks, if you guys have a small or medium business, maybe you use QuickBooks, and they give that in combination with MailChimp, which is something that allows you to send out essentially marketing by emails, by SMS, text message, stuff like that. So here's essentially the overview of the business solutions, right? It helps you manage finances through AI-powered insights and tools, of course. They have to say AI. Track industry-tailored project performance and profitability insights. Moving on further, they attract and engage customers. This is MailChimp. The enterprise suite includes MailChimp's marketing technology, helping businesses find, retain, and manage customers through email and SMS campaigns, and leverage customer data from QuickBooks to find untapped revenue opportunities. And then, of course, to stay compliant, pay and manage teams with confidence, and get paid faster and easily manage bills overall. So it's a whole suite of just business management stuff, a lot of business management tools. So that's their biggest line of revenue right there. So why was the stock down? Well, because MailChimp revenue was kind of soft, and that is a decent portion of the global business solutions segment. Moving on further here, let's get into it. The company provides products such as tax preparation software TurboTax, personal finance portal Credit Karma, and accounting software QuickBooks. MailChimp saw its fourth quarter revenue decline slightly, and that's not what Wall Street was looking for. The CFO said that MailChimp is a near-term drag on growth, but the company has initiatives underway and expects it to be performing well by the year end. So a little bit of a blip there in the growth story for the global business solutions segment. The small businesses are the bread and butter of MailChimp, adding they found it a bit harder to use, talking about the customers, which hurts retention and expansion. So that's what the CFO is talking about, guys. They have initiatives underway, possibly to make it more of a simplified user experience so that customers are able to make the most out of this software and grow their business. Intuit has largely completed the shift from QuickBooks desktop licenses to subscriptions and closed the pricing gap with QuickBooks Online, resulting in slower desktop growth. So like I was saying before, guys, before they used to sell QuickBooks desktop licenses as a one-time fee, $2,000, $3,000 type of thing, right? One-time fee. Now they've done what Adobe and a lot of other companies have done, which is pivot to an annual subscription revenue model so you can project revenues a little bit better, especially when you have high client retention. So that's why you have a pivot here in terms of the growth rates. So QuickBooks desktop licenses, the growth rates there are slowing down, which is when we bring up the financial statements later, and I'll show you guys it's slowing down, but the subscription model is picking up pace because they're doing a pivot. Excluding MailChimp, the revenue growth slowdown is due to lower contribution from price increases expected in 2026, particularly in desktop, as they're phasing out that type of the model of the business. Moving on further, with the launch of AI agents, of course, everybody has their own AI agents, for its QuickBooks portfolio, Intuit also raised the prices of QuickBooks Online and payroll subscription services last month. Here's what the CFO had to say further. Every time we do a price change, we realize that we are too conservative, but customer attrition ends up being below our expectations, meaning every time they raise prices, they don't lose that many customers. So apparently they're just not raising prices enough. That's what it means when they're talking about the attrition is below expectations. Intuit expects fiscal 2026 revenue to be between $21 billion and $21.2, which is largely in line with the analyst estimates of $21.12. EPS was also expected to be between $22.98 and $23.18, which is somewhat in line with expectations of 23. So forward-looking guidance came in pretty much in line with expectations. So today, unfortunately, even with the double beat and inline guidance, just because of that MailChimp rollout, right? Well, sadly, guys, the company's down 5%. The company's projection for first quarter revenue of growth of 14 to 15% came in below the expectations of 16.1. So the full year guidance was good, but for next quarter, coming in a bit underwhelming. Moving on further, the fourth quarter revenue, the one that just closed right now, grew 20%, which is fantastic. And additionally, Intuit's board of directors approved a $3.2 billion share buyback that is totaling now $5.3 billion in the pipeline for share repurchases. $5.3 billion, guys, in terms of total shares that they can buy back is about 2.7% of the stock's float. So not truly largely significant, but still not nothing, right? And I see them do a little bit of buybacks there too. And they did end the quarter with 20.5% net margins. This company does a great job, guys, of just being super consistent with free cash flow for the most part. Take a look here. They don't spend that much money on CapEx. You can see free cash flow, the teal line in the middle here, increases every single year. That's not a problem for them. And it is a very profitable company. Net margins are usually like high teens to low 20s. So that's definitely not a problem for them too. And their margins are moving in the right direction. Every quarter they try to do a little bit better in terms of becoming a more efficient company. Now, some lines of business, as you'll see, were doing very well, especially the consumer segment. So here's your total pro-tax revenue, which is tax services for professionals, not just for the average person with an average paycheck, but truly for professionals with small businesses and stuff like that. Revenue in the blue column down is up. Credit Karma revenue, nice performance now on Credit Karma. It was struggling a little bit. They blasted some marketing campaigns in the last 2 years and really started getting the revenue growth back there. And TurboTax online revenue, sadly, I do not have a column for the purple bar right here, which is TurboTax, which is the biggest component of their consumer segment, but it actually did quite well. If you take a look at some of the numbers right here, I know they're very small. I'll just read out the numbers to you. If you take a look at TurboTax, it was up 9% year over year. So Global Business Solutions, that line of the business, guys, for the entire Q4, because they did Q4, and I mean, they run a different calendar year because of tax purposes or whatnot, but still. So in terms of the fiscal year end, 16% on global business. TurboTax for the full year, 9%, but it was 17% in the quarter. Credit Karma, the fastest line of business growth for the consumer segment, was up 34% year over year for the full fiscal year and 35% for the quarter. And ProTax, the smallest line of business in the consumer segment, was up 4% for the fiscal year, but 10% in the most recent quarter. Not too bad. Here is your guidance for the full year next year across all lines of business. Global Business Solutions. So you remember I was talking to you guys about the QuickBooks and MailChimp right there. So Global Business Solution, their largest line of business, expectations for the full next year, 14 to 15% growth. Not too bad, guys, but it is lower than 2023, where this grew at 24%, and it is lower than 2024 when they grew 19, and lower than 2025 when they grew 16. So the growth is slowing down, but still, mid double digits for Global Business Solutions is still very strong, but Intuit just not growing as fast as they once did. So that's probably why you're not going to see the stock price do this types of rallies again, right? Moving on further into Intuit's various lines of businesses right here, you'll see that for the TurboTax, right, in terms of the expectations, 8% year over year. That is in line with 2024 and in line with 2025. So 8% relatively in line, still growing high single digits. Credit Karma, full guidance for next year, guys, only 10 to 13%. Now, this one has been oscillating wildly, but it will not be as good as 2025. That's not too much of an issue here. Low double digits, but still growing double digits, which is okay, but still a far cry from the growth that they had in 2025. But as I said, they just did a massive marketing blast in 2025. That's what really helped them grow. So maybe they just want to save some money and just retain the customers that they have and increase prices. ProTax, 2 to 3%, but then again, this one has not been the best performing category overall. And as a result, the entire consumer category, 8 to 9% growth. Now, that's as good as 2024, but not as good as 2025. So you can see the guidance for the full fiscal year, guys, a little bit lighter than it was in 2025. So the growth indeed for Intuit is slowing down a little bit. However, it's the law of large numbers. Eventually, it just catches up to you, right? I wouldn't say it's unhealthy. Every single company goes through this. Now, in terms of the growth for the future, for the next few years, they're still doing well, guys. They're not flatlining. EPS is still going to grow really well. Revenue is still going to grow really well as well. As you can see, the average revenue growth rate every year for the next 3 years is about 11% for revenue and 14.6% per year for EPS, which is very decent. So at $650, where they are right now, into this beautiful breakout and retest area. Do you remember Intuit was stuck in a range all of last year? Literally all of last year. Now they've broken out. Now they're retesting the back end of the whole 650 area. If we come back into here, is the stock a buy around 650? Well, the valuation right now is quite manageable on a forward basis. Last year, they had to grow into their valuation because they ran a lot really fast. And whenever that happens, sometimes stocks need to consolidate. That being said, at 650, the forward price to earnings is 28.23. The forward PEG ratio is 1.93, which is a little bit high. And the free cash flow yield at 3.08% is okay, but nothing crazy, right? It's not 4, it's not 5%. So you can say that Intuit right now is somewhat fairly valued. It's not cheap, It's not really expensive by any metric. Is it a good company to invest in the long term, though? My answer indeed is yes. It's a very good free cash flow generation company. It's a company that will retain its net margins. They're arguably the industry leader in not only enterprise software for small, medium businesses, for accounting software. MailChimp is a bit of a toss-up. I'm not too sure if they need to include that. It was a company that they bought back in the day. I'll remind you, MailChimp, they bought it back in 2021. But still, this one, you can argue that it is improving success for consumers, but is it really 2xing, 3xing the QuickBooks service? Probably not. So that's somewhat debatable, but they have a lot of very strong consumer products, guys. Credit Karma is not going away. TurboTax is not going away. That is industry-leading software. So they have a lot of different segments of the business that are very attractive, and they have carved away a very decent competitive advantage. This is not one that I own personally, but I would not mind either owning it for a long-term portfolio. Good competitive advantage. The valuation is not too high right now. Very streamlined revenue EPS growth. It's not really a company that you need to worry about. High margins, high free cash flow. So it does meet my criteria for a solid long-term company that can compound returns over time, and we are getting a much more attractive price. And on the technicals as well, this breakout retest might just be something that I might be looking to play, maybe for some call debit spreads or something like that, as it might just resume its trajectory upwards into the end of the year and into 2026 with their very decent guidance numbers. As the numbers slow down, they're coming into kind of their terminal growth rates, but I still would not be surprised if this company is able to grow into the teens revenue for the next foreseeable future, 5-6 years, and EPS as well. The trajectory seems to be quite clear. So no problems with Intuit at all, just a bit of choppiness in the price action. And with that being said, that's everything I had for you guys in terms of our earnings rundowns. Hopefully you enjoyed those. Spend a bit more time on Intuit because we haven't done it on the channel in like 3-4 quarters. So I figured I should keep you guys up to date, right? So that being said, that's everything for those things. Now let's move into our technical analysis rundown, shall we? So in terms of the S&P and how Jackson Hole tomorrow is going to play into the action, guys, well, it's very simple, right? Tomorrow is really going to be the turning points for the markets. The S&P right now, in terms of the retracement size from the top, is currently standing at about 38.2%, but it did dip as low as 50. If tomorrow is a 1% day and the bulls, unfortunately, lose some ground here to the bears, it's going to be really tough, guys, to really push the levels a bit higher into the end of the month of August, into September as well. You'd have one major catalyst next week, which is NVIDIA earnings, which could keyword save the markets, but I wouldn't be counting on that necessarily to save the markets. Right now, what I was telling my Discord group today is that there's a lack of positive catalysts, right? You don't have really much in terms of positivity to look forward to. The tax bill is already passed. The tariff situation is already passed. Countries have agreed to the current tariff rates already. And we also don't have any information on a formal rate cut much before the month of September. So from now until the midpoint of September, we just don't really have any positive data to look forward to. No more earnings other than NVIDIA either. So in the event that Jerome Powell tomorrow sours the markets a little bit, it's going to be really tough to find some catalysts to bring the markets higher, countering seasonality and countering that lack of positive news, those lack of positive news catalysts that are on the horizon. So if you pull back too much, you really do open up the door here, guys, for the possible daily downtrend rollover and for possibly just a little bit more very healthy weekly consolidation. Now, the bulls do have a lot of space on the weekly, talking about anything at this point above this infamous 620 level, looking for a weekly higher low. And that would not look so awkward, guys. Even if we consolidate for the next few weeks into the month of September, would it look so awkward truly on the monthly timeframes to go set a higher low into the month of September, weak seasonality and weak everything else, and then maybe pop up by Q4 in which where we have better seasonality, right? Such as the late October stage, November and December. No, it would not look so awkward at all. So I'm not trying to predict that that is exactly what the market's going to do. I'm just here to say I would not be surprised if the market's going to do that. And in the event that it does happen, guys, just do what I've been telling everybody to do for the last couple of weeks, right? Which is just be careful on any short-term directional longs, short-term call options, 1 week, 2 week, 3 weeks. You may not get the best result, especially we know that fall is a very choppy seasonal period. However, if we're saving buying power and staying away from shorter-term directional bets, well, we can possibly look to sell some put options under the market. On big red days, in the past 2 videos this week, I've told you guys, just benefit from big red days to identify companies and levels that you want to play around and then sell puts under the market. It is the preferred strategy leading into a bit of volatility, leading into a bit of price action uncertainty overall. On to QQQs right now. QQQs down about 0.46% today. And the same concept here, guys. Look at this move down by the bears. This is a very large move. Talking about a 618 retracement all the way to the lows of yesterday was 782. Believe me when I say, if they take back any more, it is very unlikely that the markets just V-shape this without any positive news catalysts on the horizon. If anything, if we give back any more of this, you open up the door for the infamous lower high into lower low into the daily downtrend flush. If you get that flush, I know flush is a big word, but it's not so bad here, guys. Even if you unwind this weekly time frame right here, the weekly higher lows are still set right down there, 552. If you unwind this and go into a bit of seasonality, a bit of consolidation, you got huge support down here. Prior all-time high resistance range will be your newfound support. That'll be a nice correction on the QQQs of about 5, 6, 7, 8, down to about 10%. Usually we get about 2 of those per year. Who knows? Maybe this is going to be the next one. It definitely wouldn't be crazy because we know we have all the catalysts on the table to have that style of a pullback. So as I always say, guys, you have to hope for the best in the markets because the markets always have a long-term upward bias, but you have to kind of expect the worst, especially when you know that the table is set for the worst right now, especially considering the consolidation that we saw earlier this week. The bulls have a chance to save this, of course, but it's going to need some bullishness from Jerome Powell, and maybe they're only able to save it in 2 attempts at resetting the daily uptrend. So tomorrow's price action is very, very, very key, guys. Depending on tomorrow's price action, it's really going to give you the chances of going either way. If Jerome Powell is nice to us and the markets can start finally pricing in the certainty of a rate cut by September, then you have a chance. If it's uncertain and the September rate cut odds continue being uncertain, well, maybe you just drift lower or maybe just go into some sideways awkward action until that September rate cut meeting, which is about 3 weeks away at this point in time. So do not predict the markets, guys. Go into these markets right now with a plan. You should have a plan. My plan is I'm going to be saving a little bit of cash so I can buy long-term companies for my long-term portfolio. But also in terms of the trading plan, I'm not really doing any short-term directional swing trades right now. I'm going to be using the wheel strategy to sell puts under the market on big red days on my favorite companies under the market. That just removes any uncertainty and any price predictions out of the mix. I'm just looking for my favorite companies into areas that I want. Moving on to XLF financials right now. So financials down about 0.32%. Not the worst, but just doing a whole lot of nothing here, guys. Pay attention to Monday's low. If you lose that, sadly, you unwind this into a daily downtrend. Nice uptrend right now. The bulls are trying their best to persist. If we unwind with Powell tomorrow, you guys know what's going to happen. We're ending up back in the same range that we were prior resistance highs right here, which are going to be current support, 52 down about $50. And even if you unwind this move right there, the monthly time frame should bring you guys a lot of clarity moving forward, okay? Especially into the end of August and September. If you pull back on the monthly looking for a monthly higher low, August, September, go down to 12 EMA, right around $50. Maybe there you can find some support. You'll have all of those guys as well, so it wouldn't look too awkward. On to healthcare right now. Healthcare tried its best today. Tried its best to push higher, and it did. Unfortunately, it unwound all the rest of the day and just could not get it done. So we will see, is healthcare able to close above the infamous 137 area of resistance, or will they just get dragged right back down into the mix? I am fine either way, guys. It's so tough with an event like tomorrow to predict where the price is going to be, so I'm not going to do that. But what I've been telling you guys about healthcare is it's a good accumulation zone. It's a monthly downtrend into a lot of prior support from 2021, 2022, 2023, and it's the 50 monthly moving average. So if they allow me to accumulate healthcare for longer, if we continue being in this area, that's perfectly fine. I already have some positions. If it just launches to the upside, I'm fine with what I have, but healthcare is still a very decent DCA opportunity on the ETF or in some of your favorite healthcare names. On to the semiconductor index right now. Semiconductors down 0.52%. Unwind is very clear at this point. We had a bounce coming to the end of the day yesterday, but I was telling you guys, right, they have to convert, right? If you do not convert this hourly uptrend into anything more, you see they gave it all back this morning. If you roll over with Powell tomorrow, that's the end of a very short-lived bounce on the 4-hour time frame. The rollover is very possible and very likely, I would argue. And at that point, you're just going to be losing the daily uptrend further and further because they lost it right here. They flushed. They're trying to salvage right now, but it's not looking the best, right? We're below the 12, below the 26 EMAs, which hasn't really happened. We haven't had 2 closes below the 26 EMAs, guys, in like 3-4 months. So it has to be notable to you. This is your lead bull. When you lose your lead bull, you can lose the market into a bit of a correction phase. That being said, if we do unwind further as a result of tomorrow, daily downturn or something of that nature, you're going right back into weekly consolidation. If you flush these lows, 280, unfortunately, guys, you're also losing the weekly uptrend, right? This was a very nice weekly uptrend for the last 4 months. If you lose it, no problem at all. Sure, they can just do the one-time flush or the two-step weekly downtrend process. What you're looking for, though, the cleanest timeframes of them all for you guys moving forward, August and September, I want you to focus on the monthly timeframes. It's been 3-4 months of beautiful rally. If you pull back and do something like this into September and go from the top to the bottom, everybody's going to be panicking, 10-12% pullback on the semiconductor index. Everybody's going to be panicking. Would it look so awkward to set a monthly higher low back down into big resistance, which is big support, tag the monthly 12 EMA and rally? No, it would not look so awkward, right? So I'm not trying to predict that that's what's going to happen, but if it does happen, be ready, because when semis pull down into there, people are going to be claiming the sky is falling. It's over. The AI run is over. The bull market is over. But you guys are going to be ready, right? You guys are going to be knowing that it's time to buy the dip, because you probably are looking very good for a Q4 expansion. Why? Because we don't follow narratives here on the channel, guys. You follow earnings, and company earnings for a lot of these semiconductor players have been very strong. 2025 demand for guidance is very strong, and even into 2026, they just cannot put out these products fast enough. There's just too much demand. So all dips will be for buying. Moving on to the Russell right now. The Russell up 0.25%. Very weird move on the Russell today. That being said, the bulls are trying to go for the completion here of the uptrending pattern. 232 down about 225. They're really trying to keep the move alive. We'll see if they can do it, pulling down into these guys. We'll see, though, guys. Tomorrow's going to be a big day. If Powell just throws cold water on the market, for sure this one's coming down. And once again, we're going to get rejected from resistance, looking for a weekly higher low. Anything above 212, looking for the higher low for possible trend continuation. If Powell is nice to us, then you might see the growth stocks break out. Why? Because they need yields to come down. If interest rates come down for sure, then growth stocks get a very clear path forward. So into tomorrow's price action, it's going to be largely dependent on what Jerome Powell has to say, which is why it's very tough to know which way this one's going to break. Are they going to go for the big smash follow through? If Jerome Powell's clear and he says, yeah, we're probably getting ready for a cut in September, then you'll expect growth stocks to have a very good day tomorrow. If he doesn't, then you will expect growth stocks to pull back with the rest of the market and head back down to support, which is 216, down about 208. That's everything for your major market rundown right there. The VIX today was up 6% in preparation for tomorrow. As I said, if Jerome Powell is not nice to us, you guys know exactly what's going to happen. The VIX is going to start spiking. And you guys know, big red movement on stocks, higher VIX. You guys know what the plan is. Look for short puts under the market on your favorite stocks. You'll get some tremendous distance. I gave many examples in yesterday's video of the type of moves you're looking for. You go on this list, you have a watch list, and you see stocks down 5, 6, 7, 8% with an increase in the VIX, you'll be able to find some strikes, writing put options below the market for next week, probably like another 10, 12, 15% below where they're currently trading. So those are the styles of plays that I'll be looking for into tomorrow if the VIX rallies. Moving on to yields right now. Yields are going to move big tomorrow, guys. I mean, they're all over the place, right? Yields, I mean, non-farm payrolls, right? The Fed's going to cut. Then you get the CPI and PPI, stuff like that. Oh, the Fed can cut. Oh, the Fed can cut. Oh, the Fed can cut. Fed can cut. Right? It's all over the place, guys. You're not going to get any clarity in long-term yield movements on the 20 and on the 10, probably, well, either until tomorrow or the September meeting. The 20-year yield will be locked between 5% and 4.7, and the 10-year yield as well will be locked between 4.2 and roughly 4.5 as well. So pay attention to those two levels for the break. If you get it, that's only when you know that bonds will truly be ready to start breaking out. As of right now, they're still very muted. Moving on to gold right now. Gold, very muted day for gold, guys. There's literally nothing to do here on gold. Literally nothing at all. As I say many times, gold is many things. Sometimes it's an inflation hedge. Sometimes it's a market uncertainty hedge. For the last 3 months, it's been an absolutely nothing hedge because just there's no breakout, right? We're still trapped between 34 and 33.65. Resistance and to the downside at 3,300 down to about 33.64. If I'm looking for a clean directional bet on gold that lasts more than 3 hours, I need a break of resistance. Give me a break, retest, and run trade. I'll try to take that one, or to the downside, give me a break, retest, and run trade. If you get the upside break, right, you're looking for the back test 33, take profit is 35. If you get the downside break, you could find a heck of a runner, guys, because this is monthly overbought conditions, monthly very extended on the RSI, and you might just be heading a little bit down lower there, 3,000. This is all going to be about the economic outlook, right? If things get more uncertain tomorrow with the fact that the Fed is not going to cut because they're worried about certain things, well, then you might see gold rally. If Jerome Powell says, yeah, we're pretty much ready for rate cuts, everything's not looking too bad, well, then gold might just embark on its last leg of downside here into consolidation because people will pivot away from the hedge trades into equities, in my opinion. Moving on to Bitcoin right now. Bitcoin sliding again. Down here on the day, 1.57%. Daily downtrend is very clear right now. And we're currently challenging the good old 112 location, the bottom here, right, after the non-farm payrolls. If you flush this area, it should be very clear what's happening right now. Just going for a weekly downtrend, perhaps, into monthly consolidation, which is why I say monthly timeframes in this period of time in the market, fall seasonality, watch the monthly timeframes. You have ran a ton off the lows here. The tariff lows might just be looking for some very healthy monthly consolidation. Where am I looking for Bitcoin swing trades? Prior all-time highs, 106 to 100, right? So that's where I'm going to be looking for a bit of a higher low trade for possible then slow reversal pattern and make it up. The long-term bulls are still in control, but you got to be patient with them because now the short-term bears are kind of taking over on the weekly, and on the daily they are still in control as well. So just be patient with this trade. I'll be shopping down here, 108 down to 100, building some swing trades into Q4. Into Ethereum, same concept. Ethereum has rallied an absolute ton, guys, an absolute ton. Now it's time for consolidation. Daily downtrend, possibly lower high is set and might just be looking for the lower low. 4,000 down to 3,750 is the next area that you should be looking for on Ethereum. Fantastic rally, now a period of consolidation. Crypto does not move on its own anymore, despite what people might like to think, right? If the indexes and the sentiment in the overall market is bad, crypto is going to go down. If the overall sentiment in the market gets better than earlier this week, crypto is going to rally further. So it's going to be all about the rest of the sentiment in the market. But if we're looking at the monthly time frame right here, would it be so awkward to have some monthly consolidation into possibly prior highs and accumulate some more Ethereum positions? No. So that's a style of trade that I will be looking for personally, a pullback into here, and then maybe sell some puts in under the market on Ethereum on some favorite names, whether it's ETHA or ETHE or BMNR, whatever you guys want, whatever your preferred asset to play Ethereum is, well, you can possibly look to sell some puts well under the market, accumulate some positions for the eventual next leg of the rally for a longer duration play, not just playing this on the 1 hour time frame, day to day, trying to pick the bottom of ETH, trying to pick the top of ETH, right? Not that easy, guys. Moving on to our big tech name list, shall we? All right, so first, take a look at Apple real quick. Apple is down 0.5%. Apple continues its decline now, about 6-7 days of decline in a row after a massive push. The bulls are just looking for some consolidation. Haven't taken back too much of the move, but we are moving further and further into the recently claimed support area. It's a big area for Apple, guys. It's a big area of congestion, support, resistance for so long. If we do pull back a little bit more on Apple, the reload area for me on Apple will be around 220, 217, looking for a possible higher low for possible trend continuation. It's going to be a long trend overall. I will be looking to reload some Apple longs, possibly for the expansion into Q3 and Q4, as now Apple has somewhat solved its revenue problems, and I'm looking forward to their presentation early September, where they will be releasing their new generation of iPhone, the iPhone 17, and several other new products, which may just stimulate consumers into that infamous refresh cycle that Apple's been looking for the past few years. Moving on to AMD right now, AMD continues to slide down another 0.9%. We have clearly lost the daily uptrend right now. So the daily bears are currently in control. If we get a nice little pop, you might expect them to be looking for a lower high into lower low, continuation to the downside. If we just continue the flush, pay attention, guys. 156 is pretty much the last line of defense right here. 156, 155, big area of congestion. If you drop through this one as if it's not even there, well, you're just gonna be looking for more weekly consolidation on AMD, possibly bringing you down into the lower area. 150 down to about 130 is gonna be the next range. If we pull back hard on AMD, guys, my reload area on AMD to sell puts or look for some reloads on the longs is indeed down here, right? The whole 147, 145, 140 area. That's where I will be looking to build more AMD positions for the monthly retest possibly of those lows, retest of the EMAs down there. The valuation, even at 170, is very good. At 140 gets even better, and I will be looking to carry these positions probably over the next 6-12 months as AMD continues on its expansion of its fundamentals. You guys know the thesis. I've been bringing it up every single day almost. The thesis is the crazy expansion of revenue and the crazy expansion of EPS over the next 2-3 years. So all the positions that I build here on AMD will be carried at least 6, 12, 18 months forward. Moving on to Amazon right now, and even for some short-term swing trades, guys, just wait for better prices possibly. Moving on to Amazon right now, Amazon down 0.83%. We will see what's Amazon going to do. If they crack below 219 tomorrow, sadly, you lose the daily uptrend. If you lose this area, 219, guys, you also forfeit the nice area of support that we had broken above, trying to reclaim it since post-earnings. Pay attention, though. If you decline beyond that, you might just be looking for more weekly consolidation. The weekly higher lows are set at 212. If you get the weekly downtrend over the next few weeks, is it that big of a deal? No. Focus on the monthly timeframes. You're looking for a monthly higher low, right? This was a very big drop after tariffs. The bulls could not get the expansion done, truly. They couldn't get the 100% engulfing move. They have to two-step process this. 1, and then 2 possibly. So if you get more consolidation on Amazon, fantastic opportunity to buy more shares for long-term portfolios. But this area down here will be the area that I'll be targeting for some short puts into the low 210, 212 area, but also maybe for some reload, for some leaps or something like that, some more directional longs. Moving into Google right now. Google was up 1% today, but gave it all back. And sadly, also still struggling to maintain the daily, right? So they lost the daily uptrend with the flush of the lows yesterday. If they move further and further down, guys, well, sadly, you expect one of two things. You're probably going to expect the back test here of resistance, which is 202 down to 207. Maybe the back test, as they did today, rejection, and then maybe move a little bit lower into our next area of price action, which is the next line of defense for the bulls. 195 down to about 187. Prior highs, support, and then now probably support again. And the weekly is still in a very nice uptrend on Google, looking just for a new weekly higher low. So if you ask me where do I want to position on Google, possibly down there, lower 190s. If we get lower to 190s, maybe some directional swing trades will be in order. I'll let you guys know. And also selling puts under the market. I would not mind being assigned Google in that lower area. Once again, same concepts as the rest of all the stocks that I'm looking at. Right, looking for a monthly higher low in the event that the early portion of September is also not that favorable for the market. So, 190 to 180, sweet little pocket to possibly looking forward to on Google. I'm not saying it's going to go down there. I'm just saying if it does, these are the areas that I'm looking to shop because I'm not going to position right here into resistance. I already have my leaps. I bought leaps down here. The reload area comes a little bit lower. And also for some short puts too. Moving on to Meta right now. Meta down about 1.15%. So clear unwind here of the daily uptrend. Very clear as day in my opinion. Big unwind. With this big unwind, any pop might just result in a lower high to lower low flush. We're reacting currently from support, which is roughly, let's call it 735. Prior highs. Now trying to save that. If they do lose it though, you're going for the full earnings gap fill. I know people don't want to hear that, but it's just normal price action, guys, right? Moving on to the weekly is still in a weekly uptrend right now. You'd probably just be looking to backtest the whole area that we just left out of, talking about lower 700, 710, down to about 680. If you find your way into there, I would not mind playing some directional longs on Meta and loading up more shares for the long-term portfolio as well. Very tough to understand whether or not they're going to hold this current area. If Powell is not nice to us and tech continues to slide, it's going to go down, guys, for sure, right? Just focus on the monthly. Would it look so awkward to find Meta, do a little bit of a monthly pullback here, and then go for the classic Meta expansion for another beautiful leg of rally into the end of Q3 and Q4? Probably not. So these are the styles of pullback that I'm looking for. Moving on to Microsoft right now. Microsoft down about 0.29% on the day. Daily downtrend simply continues. I was telling you guys, watch out. When you have a 12 EMA for 3-4 months, and then you lose it, and you lose the uptrend. This is two things at the same time. Loss of the 12 and loss of the uptrend. Huge, very, 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 very nice sustained uptrend right here. Lost it, right? So now the bears are in full short-term control. We were very overbought. I was warning people about this. So now we've unwound everything from the top of earnings to where we are right now, 10% to the downside. So be careful. They have not established any clear areas of support on the way up. Meaning the first line of defense is going to be this 12 EMA at about 500 psychological. Is there really anything there other than the EMA? Well, let me put a line there and you guys tell me, right? At 500, is there anything really here? Well, maybe you can argue that there's these guys. Are they that strong though? Is that the same as this level right here? No. Is it the same as this level right here? No. So rather than trying to predict, yeah, this is exactly where Microsoft's going to stop, I'm not going to do that. I'll just wait until they're done consolidation, give me a brand new daily uptrend eventually, and then I can position for a long, stop loss goes below there, and then you target for the weekly uptrend recapture by the bulls, looking for a bit more. Until that time, I'm not doing any swing trades on Microsoft, neither long, neither short, and I'm also not adding to the company either, as the valuation is still a little bit stretched in my humble opinion, trading at about a mid Let me just redo it for you guys right now because I know it's annoying when I have 550 here and now the price is 500. So if you guys want me to do the valuation at 500 right now, very simple. EPS stays the same. That hasn't changed. 500 by 1342, you're looking at a 37.25. That's still high for Microsoft, man. It's not cheap, right? So you're not really getting a good deal right now on Microsoft. Divided by the EPS growth rate, which is 14, you're trading at a 2.6 peg. That's not cheap. It's not really cheap, right? So it's not cheap. It's not crazy expensive, not as much as it was, but still not enough to get me nibbling on any more long-term shares. I have all the shares that I want. On to Netflix right now. Netflix down about 0.63%. Netflix still battling with this area. 12.15 down to 11.86. If Jerome Powell is not nice to us, that is the end of your daily uptrend. And taking a look at how high did the bulls get? This entire daily uptrend, what was it? Well, we were just looking for a weekly bounce because we lost the weekly uptrend. Clear as day, loss of the weekly uptrend. Now you need the bulls to bounce for a decent size to get it back, right? How decent was the bounce size? Well, I'm glad you asked. It was only a 50% bounce. So this gives the bulls a 50% chance of recapturing, but it gives the bears a 50% chance of the weekly downtrend flush. If tomorrow's not good and the whole rest of the market unwinds, what do you guys think is favored? Probably the continuation of the slide and continuation of the monthly consolidation that Netflix has done many times in the stock price history. It rallies a ton and then consolidates back to the 12 EMA. Where am I buying Netflix? Probably like under 1100 to 1000. I'm not saying it's going to happen. I'm just saying if it does happen, that's where you'll find me buying and also probably find me doing a bit of swing trades. Moving on to NVIDIA. What you guys need to understand from me, guys, I'm a very patient guy, right? I know a lot of these price targets might leave you guys in disbelief saying, no, it can't possibly go down there. It doesn't have to. If it gets close, I'll just sell puts under the market and collect premium. If it does get there, well, I'll be patient. I was able to be patient enough to clip every single one of all these moves, guys, all of them with big size. When they come into big historical levels, that's when I do leap calls. If they're in the middle, I'll just do short puts. So I win either way. I'll always find some trade opportunities on these stocks, even if they don't pull back to the true levels, right? Moving on to NVIDIA right now, they have earnings coming up next Wednesday. So probably the price action is going to be a bit muted before then. I'm not expecting a break of the all-time high before Wednesday, but I'm also not expecting a massive flush maybe before Wednesday as well. A lot of people will just be waiting for earnings. That being said, we did lose the higher lows yesterday. If Powell's not nice to us, well, we're going to lose this entire uptrend overall, and we'll be heading into a bit of weekly consolidation on NVIDIA. That being said, where could we come down to for weekly consolidation? Well, the higher lows are here, 142, and the next big area of support is down here, roughly around the 152 location. So keep that location in mind, especially when looking at the monthly time frame. Would it look so awkward for NVIDIA to pull back here late August after earnings, if earnings are not well received, into September? No, and I'll be looking to sell some put options down there. It doesn't even need to come close to there. If it just comes down to 160, I'll still be able to sell some put options down there. But if it does come down here, that's when you guys are going to see me with a pretty sizable, maybe even leap call position on NVIDIA and even some shorter term swing trades as well. I'm just looking for classic market movement, the same thing that NVIDIA does, not all that frequently, but has shown many times before in the span of this entire 3-4 year rally. So I'm looking for the bigger moves. I'm not looking to trade NVIDIA from here up to there. I don't care about those moves. I want the big moves. I want the juicy moves. I put them in, I position them with size, and then the rallies can usually be pretty good if you time them correctly. The last time we did this was during the tariff lows, I'll remind you, up to the swing trade high. So I didn't get this entire move, but I got a very nice portion of it. Moving on to Tesla right now. Tesla 1.17% to the downside. Tesla just doing a whole lot of nothing. They unwound this entire move, sadly. Daily downtrend on Tesla right now, rejection from resistance, 360 to 340. And on the weekly, guys, well, they're also unwinding this move a little bit more. So the next trade attempt for Tesla, for me at least, is probably going to be in around support low. So you wanted to go for the breakout trade on the weekly. If the markets are not favorable, though, which they're not looking too favorable right now, we'll see what Jerome Powell has to say. Right? Well, then unfortunately, we're coming right back down here to support, which starts at 300, down about 256. That'll be the next area that I'm looking to position. But since Tesla is in like the middle of the road territory right now, we're literally stuck in the middle. You would really, here's the condition, right? If the SPY and the rest of the market was doing fine, and just going up, but Tesla was lagging, well, then this would be a great swing trade opportunity for a long, playing a bit of catch up on Tesla. If the whole market is coming down, what do you think Tesla's going to do? Just respect this pattern and go higher when the whole rest of the market's going down? No. So if I have a slight bearish leaning bias for the short term, well, then maybe I just want to be more patient and watch for how they react to the support level down there. Moving on to Palantir right now. Palantir up 0.11%, but very soft day on Palantir. We know what happened the last few days, guys. Big unwind of the daily uptrend. Palantir's down like 20%, man. Still about 20%. At the lows of yesterday, it was 25%. So I would love to tell you guys, yeah, for sure, the V-shape is in order. When you have a big engulfing move like this, it's very tough to do. If anything, they'll do it in a two-step process, which is a lot more logical, a lot more manageable. But then again, the bears have the chance. If the bounce is too soft, they have a chance to go for the daily downtrend rollover. We have not had a daily downtrend on Palantir, guys, in 3-4 months. Daily downtrends are part of the game. They are just very healthy weekly consolidation on this very extended stock. Anything above 128 looking for a weekly higher low. If you unwind a little bit more, you'll lead into monthly consolidation as well. This monthly candle closes in 7 days. 7 days. The candle doesn't look too good. Do you think they're going to recapture all of this in 7 days? Maybe, but what do the probabilities favor? Probably not, right? As a result, if we do get some correction on Palantir, coming back down here, 130, 125, I know, cover your ears. I know you might not like to hear these numbers because it was literally just almost 190 bucks. But it is what it is. You should be excited to be able to possibly buy Palantir down here. And even if it doesn't, if we find some big volatility, big red days, I showed you guys how to trade this one. You can sell puts under the market and collect some decent ROI. And if it comes down there, maybe you acquire shares of Palantir that you actually wanted at a level that you actually wanted it. Moving on to SOFI right now. SOFI, 3.6% to the upside, really bucking the trend today. SOFI bulls are trying their best, but we did lose the daily uptrend here, flushing the lows. Now they need to get it back. Will they be able to go for the full V-shape engulfing? What do you guys think? If the market's all red tomorrow because of Powell, is SOFI just going to magically pull a rabbit out of its hat and just run counter trend to the entire market? Probably not. Probably we unwind this move and go into a daily downtrend and into further weekly consolidation and reject from resistance once again, 24.50 down to 22.50. However, if tomorrow's good and the markets bounce a lot, well then yeah, SOFI has a really good chance of cracking above resistance and then going for the infamous breakout retest trade. If you get the good old breakout retest trade, I'll be looking stop loss there. Entry is here upon the retest because the bulls have proven to you that they want to capture the area. You look for the retest, you put the stop loss there, and then you go for the next leg of weekly expansion, which could send you into the $30 range. It would be a pretty attractive risk to reward. In the event you fade and come down, I'll be doing the same thing that I've been telling you guys I'm going to be doing, selling short puts, 20, 18, and then 16. Some there, and some there, looking to build a position on SOFI, swing trade position, of course, into monthly consolidation on this great stock at a pretty decent valuation under 20, if you ask me. On the two last ones right now, Uber up about 0.5%. Uber's just super choppy right now, man. They're trying desperately to hold on to this area, talking about 93.30, did about 90.3, doing the best job that they can, trying to hold on to this area, but it's going to be a bumpy path ahead for Uber, probably just because of the whole market sentiment right now. That being said, if we were able to do it, there is a swing trade here. For those of you that are not faint of heart and just want to disregard all macro concerns, the stop loss is down below here in 90. And the expansion target is 100 and beyond. It's not the best risk to reward, but it is positive risk to reward. So that is a possibility for some swing trade continuation on Uber. Not too bad. However, if you get the infamous unwind, well, you're just gonna be consolidating more on the weekly timeframes, right? You might just head right back down to the mid to low 80s area. Wouldn't look so awkward on Uber, just pulling back on the monthly time frame a bit. I'll be looking to go shopping if that is the case. Short puts into the low 80s and maybe some bigger swing trade longs. If we do get that monthly consolidation phase on Uber, it would be just very classic, right? Big resistance for like a year and a half. Pull back, back tested on the monthly. That's a big time frame, and we can go for a bigger trade as a result. So I'll be patient for it. If it happens, I'll let you guys know. And lastly, TSM. TSM down 0.56%. This one is a clear loss of the daily uptrend, daily downtrend, loss of 3-4 months worth of EMAs, both the 12 and the 26, and now the 50 daily EMA as well. As a result, you are well into weekly consolidation, right? That being said, just a very healthy weekly rollover right now. I say it's healthy because once again, when you zoom out to the higher time frames, who is truly in control? Well, it is obviously your bulls, and you're just looking for a higher low. NVIDIA earnings next week will probably move this one, so be mindful of that. If I find TSMC down here, 210 to 200, yes, I'm going to be doing short puts. You can even do them now. You'd be surprised the volatility that's on this stock currently. Pull back a little bit more before or after NVIDIA earnings, short puts down there, and if I find the price down into here, this is where more swing trade longs and more long-term portfolio longs get added to the mix, as the valuation at 245 was pretty good. At 200, it becomes even better. Here, you guys want me to do the valuation at 210? It's already at 20. It's already 25 forward price to earnings, right? Watch what happens if we go down. If we go down to 210, I'm not saying it's going to happen, but if, right? If you find 210 again, should you be a buyer? Well, I don't know. They're doing about $9.67 of EPS. It would be like a 21 point what peg? 21.72 on the price to earnings on a forward basis. That's very cheap for TSM. And on a peg ratio, you'd be looking at a 1.27. One of the cheaper stocks in all of semiconductors. That's what's going to happen if it's at 210. So 210, when everybody's saying it's over, it's over, it's over, that's it, that's it, that's it. No, not my viewers. My viewers know that TSMC has said for 2 quarters in a row that the pipeline for 2025 and 2026 is completely full. They cannot keep up with the demand. You can clearly see that on EPS and the forward profit estimates. And look at this revenue expansion curve as well. Crazy revenue expansion curve as well. So trust me when I say if it does come down there, I will be a buyer. Until that time, I will gladly play some short puts under the market with some distance. And if I'm assigned, I will be a very happy camper. That is everything I had for you guys for today's video. Hopefully you enjoyed. If you did enjoy, consider dropping a like. Would appreciate it for the growth of the channel. Consider subscribing if you're new. We do these every Monday to Friday after the close. And last but not least, if you have any questions, feel free to leave them down below. I'll be answering any and all comments tonight. So make sure you leave your comment if you have any questions. I'll be glad to help out, guys. That's everything I had for you. I'll see you guys tomorrow. Happy Jackson Hole Day. See you guys tomorrow after the close. Hopefully you guys make it out of this week okay. And we'll recap everything with tomorrow's price action and do even more analysis, more price target estimates, and more trade ideas. So take care. That's it for me, guys. Peace. Have a good evening. Sorry for the late upload, by the way. Was super busy after the market closed. Couldn't really film this one until about an hour ago. So better late than never, I guess. But that's it for me. Take care. Have a good evening. Get out of here. Get some rest. See you guys tomorrow. Peace.